Here's the tax strategy that almost every business owner screws up, and it's 100% legal when you do it correctly. It's called the accountable plan. Hey, and if you run an S corporation or plan to scale into one, this might be the most important tax rule you have learned this year. What's up, guys? Welcome back to our YouTube channel. I'm Mike, CPA, co-founder of Ledgerly, and today we are starting part 1 of 5 of our mini-series, all on the accountable plan. Over the next few episodes, we're going to be walking through the exact framework that we use with our clients to reimburse expenses, maximize deductions, and of course, stay fully compliant with the IRS. But we have to start with the foundation. That's what this episode is for. The accountable plan, why the IRS created it, and why S-Corp owners absolutely need one. So here's where most business owners mess up. Business owners will pay out of pocket for legitimate business expenses, and they never submit reimbursements through a compliant system. So what happens? They end up losing those deductions, or worse, their accountant or CPA books it incorrectly, and the IRS will treat those reimbursements as taxable wages. The IRS's position is clear. If you want business reimbursements to be tax-free, you must follow a written, quote-unquote, accountable plan. And this falls under the IRS regulations 1.62-2. This applies especially to S-Corp owners and shareholders because you are both the owner and the employee. So let's break it down. Here's our breakdown of a 3-step framework that we walk through with all of our clients. Step 1, we need a written plan, a formal document stating that these expenses can be reimbursed, how documentation must be submitted, timelines for the reimbursements, record-keeping procedures, and it must align with the IRS's requirement that business expenses must be business-related, substantiated, and returned if it truly doesn't have a business purpose. Remember, ordinary and necessary. So the written policy, no, it doesn't need to be filed with the state or filed with the IRS. This is going to be a written policy that you sign, you print out, and you keep in your internal documents, whether in filing cabinet or up in the cloud. Okay, step 2, we need to track and document our expenses. We need to track our receipts, our proof of business purpose, mileage log for auto, which we're going to get into in another episode, home office calculations, which we're also going to get in another episode, making sure that we're creating an Excel file or a quote-unquote separate set of books outside of your QuickBooks, making sure that we are tracking these expenses. Because at the end of the day, our reimbursable expenses in QuickBooks should be tying back to our accountable plan Excel file that we're keeping outside of the books. And number 3, the best for last, what every business owner loves to hear, the tax-free reimbursement. Once substantiated, your business can reimburse you and the business gets the tax deduction and you do not personally pick this up as income. Now, the beautiful thing is, if you become a client of Ledgerly, you get this placed on a silver platter for you. We have a written accountable plan policy that we will give to you for you to print out, sign it, keep it internally. And we also have an Excel spreadsheet ready to rock for you to use and track all of your expenses. So make sure you stay tuned for the next 4 videos because we're actually going to be walking through the actual expenses that the accountable plan was meant for. But for the sake of this video, here's exactly what you need to do. Step 1, adopt the written accountable plan policy. Step 2, start tracking those expenses correctly. Step 3, reimburse yourself, whether that's monthly, quarterly, at the end of the year. Make sure you're setting these reimbursements up for the hard-earned money that you deserve to put back in your pocket. And once that's all said and done, your tax preparer will be able to pick that up as a deduction to your business and tax-free reimbursement for you. So again, we just set the foundation here. Episodes 2 through 5 are going to show which specific expenses you can run through your accountable plan. In a little sneak peek, that's going to include your home office, the Augusta rule, auto deductions, board meetings, and personal expenses that have a business purpose. So if you want help implementing this the right way or need Ledgerly to help build your accountable plan from scratch, schedule a call with us and make sure you stay subscribed and do not miss episode 2. Home office and the Augusta rule, where we show you how to legally shift thousands of dollars in spend through your accountable plan the right way. Stay tuned for episode 2.